I needed to hop on and make a video on understanding what is a good credit score, because it's so important for you if you're running a business or if you're just trying to navigate your own personal finances. Credit scores can help you save tens of thousands of dollars on interest payments throughout the course of decades. So knowing that credit scores range typically between 300 and 900, although if you are a new person to the country, or if you have not had any sort of banking system ever set up, you might have no credit, like a 0 score. And that's completely normal. When you move to a new country, you essentially have to reestablish your entire credit. And if that's your case, you should probably download my credit score protocol in the link below this video, so that way you know exactly what to do in order to get your credit score up as high as quick as possible. Now, throughout this range of 300 to 900, typically a higher score indicates better credit health. So here's a breakdown according to credit scores. Anywhere between 300 and 560 is considered poor. 560 to 660 is considered fair. 660 to 724 is considered good. And 725 to 759 is considered very good. And 760 to above to 900 is considered excellent. Now, I would typically break this down in a little bit more and actually say 800 to 900 is kind of its own next category of like almost perfect credit score, basically. But these are the 5 most important factors that influence your credit score. Number 1 is payment history. So how long of a history, how many years have you been on time paying your bills, paying your credit cards off in full, not being late on payments? What does that history look like? The second item is credit utilization. So how much of your available credit do you use? If you have a credit card that has a limit of $1,000, are you using $20 or are you using $1,000? If you're only using a small limit, that shows that you're in control and you don't actually need it. And so they're more willing to lend you more credit because you don't seem as risky. And then the third thing is the credit history length. So that is actually the duration of how long your credit accounts have been open. That's why it's important that if you have stopped using a credit card, to not cancel it and just let it sit vacant. That way looks like you have had the card for a longer period of time. And that's why you're better off to open one line of credit and just always use that line of credit, as opposed to continuously opening up more lines of credits, closing the old ones down. The next thing, the fourth out of my list of 5, is the credit mix. So what different types of credit have you had? Do you have credit cards? Do you have secured credit cards? Do you have lines of credits? Do you have car loans? Do you have a mortgage? Do you have bills like internet and utilities? It's good to get as many diverse mixtures as you can in order to show that you are someone who is responsible with bills and loans and that you can pay them back. And then the fifth thing that affects your credit score is new credit inquiries, which is the frequency of how often you apply for credit. That could be a credit card or a car loan. It could be anything. This matters because if you are constantly trying to get access to new credit, it looks a little bit sketchy. It looks like you need new credit because you're tight on cash and can't pay off your old loans. So that's why the frequency of your credit applications matters. But this is why having a good credit score matters. If you wanted to get the top tier American Express credit card, which has amazing travel point benefits, it's allowed me to travel to Portugal and Spain all for free just by earning points. And also I'm in Mexico right now and I traveled here for free because I bought it all on points, using that to travel hack, but because I have access to those top tier credit cards. If you have a bad credit score, you won't get access to those cards. Second of all, your interest rates that you're going to get if you have a poor credit score are going to be much lower. So that's going to impact your ability to afford a house or a mortgage at least. And that'll also affect your ability to get better interest rates on all of your loans, including line of credits and credit cards and mortgage rates. So having a good credit score can save you tens of thousands of dollars in only a couple of years. Now, what constitutes a good credit score in Canada? And this is where I see so much misinformation out there. Typically, what you see online is that people consider a credit score of over 660 is considered good. I think that's wrong. I think that's so wrong and that you should not follow that advice. In today's world, when the cost of living is so high and the amount of credit that they're giving out is tightening, you need to have a much better credit score. I recommend having a credit score over 700 points. I think you need to have it over 700 points before you're even really taken seriously at any sort of loan that you're trying to apply for. And now if you want an excellent credit score where you will have access to the best credit products and the best and lowest interest rates, you should have a credit score above 760, ideally above 800 points. Now you can achieve an excellent credit score, and it's very easy to do. All you need to do is be consistent and build up a credit history of paying your bills on time, not spending more than 30% of your available credit, and consistently do this over a matter of years. One of the biggest myths around credit score is that if you avoid having any credit products, you're going to get a good, perfect credit score. That couldn't be further from the truth. If you do not have any credit cards or any loans, you will actually have a horrible credit score because no one knows how trustworthy you are in order to pay back your loans. And here are my 3 quick strategies to boost your credit score. Number 1, pay all your bills on time in full every single time, no matter what. Number 2, only use less than 30% of your available credit. If you have a credit card that has $1,000 limit on it, only spend $300 at the max. And that goes for your total credit card mixture. And number 3 is maintain a mixture of credit products. Have credit cards, have secured credit cards, have lines of credit, have mortgages, have other sorts of loans like a home equity line of credit. And then avoid closing old accounts even if you're not using them, because you want to extend the credit history that each line of credit is open for. And that is how you can maximize your credit score and have a good credit score. And if you are interested in getting my credit score protocol, you can download it in the link down below this video.